Hello traders, Gary Wagner with the gold forecast here. It is Monday morning in Honolulu, Hawaii, approximately 8:30 a.m., the 27th day of December, and this is the daily report. Gold currently trading slightly lower this morning. It is down approximately $2. When we take a look at it, $2.60 to the negative at a current print, trading at 1381.64, so 1381, 1382, bid ask spread. A weakening U.S. dollar giving a shot in the arm or a boost of about $1.70, negative $4.30 due to predominant selling, giving us a net change down about $2-3. On today's report, we will talk about my outlook for the week. We will also talk about the fact that we have seen some rate hikes over these last couple of days. These were global rate hikes according to the street, and it does seem, even though we have this very light trading activity, if in fact the gold market has kind of moved that off to the side and disregarded that. We'll talk about that all on today's daily report. Traders, we are looking at our daily Hankin or average chart. As you can see, I had a bad print in here yesterday that I will have to absolutely come in and clean out. That's this particular bar right in here. And as you can see, this is today's daily bar, which is this short green bar. It is tentatively staying above this one line that I feel is fairly critical if we're going to follow this upward path and if in fact we have seen an end to this correction. My belief tentatively is that we have, although with the light trading we have seen pressure actually come in and cause the market to dip below here yesterday. We did see that, but we did see the market recoup. In other words, yesterday it did have a low, I believe at around 71 or 72, came up off of that low. What that tells me is that even though there is potential for the market to correct here, although there is selling pressure, what I am witnessing is that each and every time this market does tend to come down, what we tend to see is some fairly large buying coming into the market. In other words, this either buy the dip mentality seems to be able to pull this market back up and consistently keep this market above rates that we would typically see. We're not seeing the kind of sell-off, that kind of what I'll call a parabolic meltdown that we saw a year ago in the market, in the gold market here. If we take a look at this area, of course, back here, you can see we had quite a sell-off, and this, of course, happened really midpoint or beginning of December, followed all the way through, and therefore we had our correction from December all the way to February, in which we went through our corrective cycle. In this case, we hit our high, we hit another high, and then as the market comes down, the one thing that I am noticing is that once again we are forming what we call a pennant formation. And of course, in a pennant formation, as these ranges contract, the energy builds. As the energy builds, it tells us that it is likely that we will get a breakout, and that breakout will have some sizable energy. Now, whenever you get these pennant formations, whether the breakout is to the upside or to the downside isn't indicated in the fact that it's formed in a pennant. But what it does tell us is as these ranges narrow, and you can see these narrowing ranges as we take a look at this market quite easily, your high and low, and then you get a series of moves in which these lows itself become higher lows, and the market moves in a way to consolidate or tightly control that range. Now, we're going to have light trading throughout this week, so the fact that we get some volatility in the market wouldn't surprise me. When I looked at the market trading yesterday, we had very, very little volume, but at the same time, we saw the market move. It opened about $1 or $2 lower. It quickly moved down about $10 or $11, and then buying ensued. We saw the market push back up. We created a hammer in terms of our candlestick chart, and that hammer showed us that we had concrete proof that this market has got some extremely good support in these areas. Will this support be able to hold? That's something we'll have to see throughout the week, and of course, once we finish off the new year. Maintain your long position and stops. This has been Gary Wagner, wishing you, as always, good trading, and we'll talk to you tomorrow for another daily report. Bye-bye.